Hi, everybody, and welcome to the podcast. I'm here today with Jeremy Kresky with Lend City. He is a mortgage broker, and he really does a lot of stuff in commercial as well. So if you're an investor, he is the guy to be talking to. He's amazing at what he does, and so is Lend City. I'm Ruth Ann Osborne, and we're going to get started here today. So thank you.
Yeah, thanks for
joining me.
Thanks for having me. So I started my career with TD Bank a number of years back. Spent some time there. Did a lot of farm business lending, and then took a break from that. Worked with Dow Chemical. So they were going through their merger at the time. So I spent a year there to help them kind of put the pieces together through the merger on a local level with a lot of the seed dealers. So in farm-related setting. And then after that took me to a local credit union. So I spent 8 years there, and along the way worked with different advisors, different referral sources. So a lot of real estate agents, but also a lot of mortgage agents and brokers as well. So that kind of piqued my interest into what it would be like on this team versus the credit union setting. And in this case, we have more than one option. So when you have a deal that you want to support, sometimes it doesn't fit the box, as they say, and you're forced to say no. So in this case, we can, instead of saying no, we can, time permitting, continue to keep trying with different lenders that have different parameters that they're looking for to put their money to work. So along that line, if we have a deal that doesn't necessarily fit, the traditional banks, as you would know, the main brands, you can imagine that they want the low risk. They're going to pay you a very good rate. Now, if you don't fit that mold, there are a lot of lenders that do a lot of business for folks that don't have that perfect cookie cutter application that the big banks look for. There's a sliding scale. So if you are way outside the box as far as cookie cutter, then the price goes up. The interest rate ultimately that you are paying will go up. But with that comes flexibility in your application criteria. That's where we come in. So if you're been declined by a bank, or you want to make sure, maybe you haven't even tried to work with a bank, but if you want to make sure that you are getting the best deal possible, essentially you apply once, we take your application, and then we shop it to as many lenders as we can in the time frame that suits your framework.
Yeah, now just to touch on that. So one thing, before I got my first house, I didn't know anything about a lender. I thought, oh, you just go to the bank and that's where your mortgage comes from.
Yep.
And a lot of people think the exact same thing. They think it's my bank. That's where I get my mortgage from. Oh, my bank tells me that my interest rate's going to be sky high. I guess I can't get a mortgage, or they won't approve me for a mortgage or anything like that. And there's a lot of other options out there. And how I explain it to people is it's like having a broker for your car insurance, right?
Absolutely.
It's the same thing.
Same
and
idea.
As soon as I ask people, I go, do you have a broker for your car insurance? 90% of people are like, oh, of course I have a broker for my car insurance. Yeah. And I say, well, it's the same thing with a mortgage broker, right? And with Lend City is they're doing the same thing. They're shopping the banks, they're shopping the B lenders, they're shopping the private lenders, they're shopping to get you the best rate overall.
Yeah. We don't like to say no, and with this setting, there's very rarely a scenario that we would have to say no. So to build on that point, is I was talking to a friend of mine over the last couple of days. They had an offer from a very well-known bank, and they were offered a rate at 4.6. So that was for a 5-year term. So to provide some context, just the starting rate for the best deal possible as of today, we were in the high threes. So you can imagine if you have a few $100,000 left owing on a mortgage, or you're buying for the first time, if you do the math, the cost savings between, say, 4.6 versus 3.9 or 3.99, that is a lot of money that's going out of your pocket and putting it into the hands of those that they want it. They offer a good service, but do they really deserve it? The market would say no.
So nobody deserves your money. You should be using that.
That's right.
Use it to take out your wife for Valentine's Day, or
coming up.
Spend it with your kids.
Absolutely.
Not give it to anybody else.
Yeah. So in that game, that kind of draws a big spotlight onto a broker's advantage for the personal lending side. Now, for the investors in the audience, every lender has limitations on, say you're a real estate investor. They all have their limits on how many doors or how many properties that you can have with them. I know in the credit union space, typically they don't have a limit on the number of doors or number of properties that you can have in your portfolio, or at least have associated with loans at that institution. So that's where you get a lot of, I have some mortgages here, some here, some here, and that becomes very limiting in the sense of if you want to do a creative financing to help grow the business, maybe you want to do a line of credit secured by property. If your properties are with different lenders, it may not make sense in your current structure, where then you have to pay someone out, bring it over here to get exactly what you need to grow your business. That being said, what we do here is we take the experience, I've been in the industry over 10 years, and look at someone's entire picture. We're aware of lenders that don't have those restrictions, that are very competitive, and they can honor a deal that would have been declined somewhere else, and they think it's the best deal possible, and they'll fund it no problem. Again, that's where working with a broker, working with an agent, a mortgage agent, is really to your advantage. Essentially, you apply once, they shop the market, saves you a lot of time going from institution to institution, and we've all heard those stories of, well, now they want to see this information, now they want to see this information, now they it just seems to at some level it doesn't end. Just like a car mechanic or you don't go to the coffee shop to get a minister, a spiritual advisor. You have to make sure that the people you're with, even though they're behind a big brand, have experience.
Yes. And you know what you're saying. So two things. One, first of all, about people asking for, oh, now they need this. I hear it all the time where my clients will call me, my buyers or sellers, and they'll be like, oh my gosh, Ruthann, I'm so frustrated because, they said that they had everything and now all of a sudden I need this, this, and this. Like they said that they had everything. And I actually had a client last year who was getting a property, helping his son out to get a property. And they went through just that. And they ended up switching, right? And going with a whole other institution because they were like, this is ridiculous. And one of the things that I do like about Lend City is that they have a whole program where it's like, okay, here's an email. This is what we need. Checkbox, 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 checkbox. And you guys aren't coming back.
Absolutely.
At the last second being like, oh, I know we're closing tomorrow, but we're also going to need to talk to your manager, right?
Exactly. And
that's not happening.
And that program does. It streamlines thing, and it's simply, if you can attach an email, you can upload to this program. So it's certainly not sophisticated in the sense you have to have a computer science degree to work it. It's very user friendly, and you can work on it and then come back to it. So it's flexible that way. Mm-hmm. If I got to get a letter from my employer says I'm earning this much money, or I got a raise, so that your past pay stubs don't reflect what you're going to be making, which that would also impact your ability to finance, say, that next few $1,000s on your ideal purchase. So with that, the simplicity is there. A little different on the commercial side. We do somewhat use we can use that program. So commercial, I mean business lending. We can do some applications on that platform. The commercial side is still a little bit more manual, where documents are either shared to or supplied via a shared drive, a shared folder online with security, of course, to protect the information, or it's emailed directly, or even old-fashioned, going back to in-person meetings, visiting the site, getting a sense of who the people are, how they manage the property that we're looking at, offering as collateral. So.
But your systems and procedures here are really good, and you can really tell as a realtor when I have somebody who they go, oh, I'm working with my bank or my lender, my whoever. I can tell usually right away by the conversations I'm having with my buyer or seller if that mortgage broker is is seasoned or not
Yeah.
seasoned,
Yep.
right? Because they know the processes, they have the procedures, companies have the processes and have the procedures that
Yep.
like you guys do, which makes everything go more smoothly. And I'm glad what you said about different lenders being able to, when you're a investor, going back to the investor side, only being able to fund so many doors.
Exactly.
Right?
Yeah.
Because like my husband and me, we're investors as well, right? We have some rental properties and things like that. And that was a really big thing for us when we were looking into starting that business. You know, what would be the best to go with, because here's what we want to do. Right? And so kind of building that backwards as well, and looking at this is the final outcome of what we want to do with our investments, our real estate investments, and then working that backwards to how do we actually do this properly from the beginning. And I think that a lot of people they're like, I'm going to invest in real estate. I'm going to get an investment property, but they don't work it backwards, and they don't talk to the right people either. Right. And one of the first, like, I get people who call me, hey, I want to get an investment property. My first question, is this your first investment property?
That's right.
You know, oh yes, it is. I'm like, okay, have you talked to a mortgage broker yet? What are you planning on doing it? Are you putting it in an incorporation? Is it going to be attached to your personal home? What are you doing? So especially, I mean, on the personal side, you should be doing the same thing too. You meet with your realtor, but you also need to be knowing your buying power and talking to a professional mortgage broker who knows what they're doing, and they can guide you properly. And same thing with investments, right? That's a really important conversation.
Yeah, and that highlights another key aspect of an application. That's more of the intangibles. So we struggle a lot when we have unorganized information. We have a very poorly thought out vision for what they want to accomplish. So if we're looking at something that, hey, I want to buy my first property, like you mentioned, it's very much transactional. So they're focusing on that transaction, but they're missing, what do we do in 5 years, 6 years, 7 years? So, and then at what point can we scale the business? I think it's this day and age where we act a lot on impulse. And a little bit of planning in the beginning, maybe holding off for the absolutely right property, and some careful planning is going to pay dividends in the long run.
Especially if you're doing those investments for your retirement.
Absolutely.
Oh my goodness.
Yeah. And then talking to an accountant. And sometimes you got to pay a little money to get the proper advice. But
it's worth it.
It is.
You pay for what you get.
You pay for what you get.
That's right.
And again, another shameless plug for the broker world is we don't get paid unless the deal funds. So we'll work hard without any upfront fees. And with that, we have our interests are aligned. We want to get you the best deal. We want you to come back. We want you to see that there's value in using a broker, and the white glove treatment is kind of the terms that we use around here when we're thinking about how do we handle and how do we work with our clients, because again, anyone out there can maybe satisfy the immediate need, but it's that advice and that extra from experience that will ensure that, hey, I'll go see Jeremy because he knows my full plan. He knows what I'm looking for. He knows my situation financially. I don't have to tell that story all over again. And we have the benefit of accessing virtually all the lenders that are out there.
Yeah. And when we were talking about doing this podcast together, one of the things that we talked about was the difference with a bank, with a credit union, and with a lender. And I mean, just like a real estate agent, right? We don't get paid. A lot of times people think that we get paid by the brokerage and we're on a salary and all that kind of stuff. But the reality is that we don't get paid. And we don't even get paid when we sell a house. We get paid like 2-3 weeks after you move into your house. And if you don't buy a house, we don't get paid at all.
That's right.
Right? And that's the same thing with yourself. And
Very much true.
We're business owners, right? Yeah. We work for ourselves. We're either incorporated or we're sole proprietors. And that's the same thing with a mortgage broker, where when you're working with a bank, they are employees, right? So your mortgage broker with a bank is an employee of the bank. They're getting a salary from the bank, probably with some bonuses and things like that. But they are not their own boss. They are not their own business or company. Where when you're working with a lender, that's where it's different, is because if you don't get them a mortgage, and if that mortgage doesn't close,
Yep.
then like you're not bringing home the bacon.
That's right. It's exactly that. So your success, your funding is our success.
Yeah.
So again, we're very much aligned with
Aligned and motivated.
with that. Very motivated to get it done and to get it done accurately and right the first time. So with that, we take the time up front to get that picture, get that vision, and then there's always going to be a laundry list of things that we need. We can reach out to your accountant. We can reach out to your bookkeeper. We can call Aunt Susie if she's got your T4s from 30 years ago. Joking aside, is we have the incentive to put in the burn the calories to get it done.
Yeah. Yeah. And as a realtor, when I hear that somebody's working with a lender, I'm like, yes, right? Because one of the things that I have everybody who works with me is that I need to talk to their mortgage broker, whether they are with a bank or a credit union or a lender. I say, I need to be in contact with your mortgage broker, because when you're buying and selling, you're with a team. So your mortgage broker is part of your team, your realtor is part of your team, your lawyer is part of your team,
Absolutely.
Your accountant is part of your team, and everybody needs to be within communication.
Yep.
And I do find that sometimes the banks will say, well, I can give you a little bit of information, but then you're just going to have to talk to the client, where there's obviously definitely the big confidentiality, but I can call you guys at like 9:00 at night and be like, hey, this is what's happening. And
That's right.
You guys are going to answer to your phone, where the bank closes at 5:00. I can't get a hold of you. Plus, I'm 100 times more likely to have a lender message me back, hey, Ruth Ann, so excited for this client. Let's do everything, to keep them happy. Reach out, let's talk.
And
right?
it's interesting you bring it up, because one thing I noticed when I joined this business is in our application, we can't actually proceed through the application if we have to do extra steps if there isn't one inputted, but we actually have to list the realtor that's working on behalf of the client in our application. So it's built in to the DNA of our applications, and it really supports that team atmosphere, team environment that we're all pushing to get your dreams. Ultimately, they're your dreams fulfilled.
Absolutely, and the team is number one. That people, sometimes you get buyers or sellers who are like, well, I don't want to give you any information. Okay, but we're all working so hard for you, for your best experience, for the best deal that we can get you, right? So team is really important, and I love that about you guys. That's like one of my favorite things. High fives on
teamwork.
Okay, so let's talk a little bit about the market.
Yeah, so the market, as we all know, it's been a little soft lately. There's a lot of distractions in the news from what usually would provide confidence. So we have interest rate uncertainty. We have our friends from the south. They're to the south, that being the U.S. They're making headlines with their politics right now, and they're making very dramatic. Love it or hate it, they're making very dramatic policy statements and threats, if you want to call it that, and tariffs. It all comes back to tariffs. So that's affecting the auto industry. That's affecting steel industry. We've seen that, and we have some long-standing trade agreements that are in the headlines right now as of even today. So those things all create uncertainty. And if anyone has got experience looking at mutual funds or stock market investments, the markets in general don't like uncertainty.
That's right.
So if we see that politically we're getting uncertainty over here, you've seen some what they call volatility up and down in the markets, the stock market per se. That affects what lenders look at. They look at what's called the bond market. So the bond market is essentially where bigger institutions access money to then lend out for your mortgage, for your investment property, for your cottage, per se. So when we look at forecasts, we look at, is the political uncertainty rising or falling? What's the stock market doing in general to kind of confirm, are we confident in the economy? Ultimately, it comes back to the bond market. What are the bonds doing? So if you can draw a line and look at a chart, if it's going this way, interest rates are trending higher. If it's going this way, interest rates are trending lower. So with that, that's a very easy way for anyone to look at. You just type in Canadian 5-year bond rate chart. And that simple line, it doesn't have to be a perfect line. It's not going to be. There's going to be some fluctuation to it. But that is exactly the first step to developing an understanding of where rates are headed. They typically follow a trend, and it takes a lot of changes in the economy to reverse those trends. So we're seeing the banks forecasting no rate changes for the rest of 26.
Which is, you know what, which is definitely building stability, because
It is.
people have not wanted to, and I always tell, especially my sellers, and last year, 2025,
Yeah.
like you're saying, anytime something happened in the economy, I call it the 2-week rule. That's what I call it. All right, it's like everything stops. No showings, nothing selling.
That's
Everything
right.
is just like, people are like, oh no. And then after 2 weeks, they're like, okay,
Yeah.
we're good. Let's go out.
Yeah.
We're okay with buying a house now. And I can actually show it because I have a chart that I send out, and it shows where the market values are and all that
nice.
stuff. And you can see, we're doing good. Trump makes an announcement and we're not doing so good. And
Yeah.
then we're not doing so good. And then we're doing good again. And then Trump
right.
makes an announcement. Like,
That's
you can
right.
put it on there.
Yeah.
Right. So definitely with the stability and with the rates that are going to stay the same, that's going to be huge for our buyers. And even in the last 5 years, I mean, COVID and all that craziness.
Oh, huge, yeah.
Like
You saw prices ramp up. You saw showings where maybe not as popular today as you've seen in the past, where they have viewings up to a certain day, and then all the offers are due on a certain day and time. And Ruthea would support that, is that the habits of buyers and then the habits of listing agents are changing to match the sign of the times.
Absolutely.
So things are sitting a little longer. Buyers have the opportunity to take their time to take a deep breath. They're not forced to do what they had to do in COVID, bid an insane number higher than the list price, and you're up against 20, sometimes 30 different interested parties.
Yeah.
So the times have changed. And I think we kind of identified it here that it's really a buyer's market at this point. We have to keep in mind that there's some seasonality to it. So we're in winter,
Yeah.
obviously. It's cold. People stay inside. They don't go to open houses. They don't look at packing boxes during the cold season.
no one wants to put their dog in the car and drive around the block for a half an hour so that somebody
That's
can
right.
do a
So
showing
someone
at
can
your
do
house.
a showing. Exactly. So we have to keep that in mind. Now, that might be an opportunity for the brave few that do go out at this time of year. And there are always listings that come up, whether that's the perfect investment property or the perfect house. There are always listings for any number of reasons why someone has to sell now. So there's seasonally some advantages. But back to interest rates, so we're not really seeing any of the major banks forecast any dramatic increases truthfully, until the fourth quarter. Maybe the fourth quarter of 2026 is when they'll start to go up, and then continue up after that.
Good to know. Can you say that again?
Yeah, so the end of 2026 is when all the major banks have indicated that that's when they think rates will start to move up. Again, watch the headlines, watch the news, go back to your bond mark, Canadian 5-year and the Canadian 10-year bond. Draw that line. Which way is the chart aiming towards? The bottom right or the top right?
And get a house before the fall.
And get a house before the fall. Get the kids in school. So that's kind of the lay of the land for interest rates. What we're seeing right now, they kind of say the best time to plant a tree is today or 20 years ago. You can also get some paralysis by analysis. There's that cliche that you can think of at this point, where there may or may not be a perfect time in theory ever. So you have to take, and that's again with experience, you take the emotion of buying a property, apply the mathematics, the economy, the interest rate environment. That's a big factor. But then there's the quality of life. It's like, well, I need to move because I can't get up and down the stairs anymore. Those factors are near and dear to our hearts. We all have family that needs to make a change. They need to make a move, no matter what the economy is doing. So there are strategies that we have not only as a real estate agent to find the right property in any environment or to find the right loan mortgage situation for any environment. We don't have to lock in for 5 years. We don't have to lock in long term. We can structure it in a way that allows for the market to change, and we're not stuck paying more than we have to when our indicators are showing us that, locking it in is maybe better in a year's time. So we can look at a 1-year rate versus a 5-year rate and take advantage of that savings that's in the market these days.
Yeah, and it makes a really huge difference. I had a property, and when I purchased it was 2 years ago. Yeah, it was 2 years ago that I purchased it. And so the rates were higher,
Yes.
quite a bit higher.
Yeah.
And I put it in for a 1 year, right? Because I knew that the rates were going to get better.
Yep.
Right? And they went down almost like an entire point.
Yep.
What a difference.
Yeah.
What a huge difference.
Yeah. So back to an earlier point about, your plain vanilla standard mortgage at any of the big five, to say a private loan. So you might see a 4 or 5 percentage point difference. The difference between, we don't see them right now, but for case in point, if you see a 6% interest rate versus a private loan today's day and age, you could get 12%. Between 6 and 12, that's $24,000 a year in interest on a $400,000 traditional loan. So you can imagine that a little change in interest rate makes a big difference when you're looking at what can my cash flow, what is my buying power, and that's where folks like us can answer that question almost in our sleep.
Well, and when you're like right now with the economy, I mean, a grocery store, oh my gosh, the grocery store. So my husband does most of the grocery shopping, and I was in the every time I go to the grocery store now, which is only once in a while, I feel shocked by like the price of broccoli.
That's right.
I mean, it's and how it looks. I have to say, the price and the look of the broccoli is way different than it was a couple of years ago.
Yeah.
Right? So, I mean, if you can save yourself $150 a month with the payments that you're making on your mortgage,
massive.
That's $150 that you can put towards groceries and gas. That is massive for a family that is living paycheck to paycheck.
You bet. Yeah, every dollar counts in this economy.
Yeah. So when I meet with clients, I always I have an email that I send out, and it says you should be mainly shopping the rates, right? Check with your bank, check with the credit union, check with a lender, and then I give, here's some contacts, Lend City, if you're going to be working with a lender, and then I have other ones for the big banks and the credit unions and stuff like that. Now, I do hear a lot of, because they'll go to one, and the first one they go to is, oh, well, don't go anywhere else because they're going to check your credit rate, and then you're going to just keep bringing down your credit rate and blah, 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 blah. But there's ways of going through the process without damaging that credit rate.
There is, yeah. So in Canada, you can check your own score without impacting it. So you just go to the Equifax is a popular one. TransUnion's another.
Karma.
Yeah,
so
so
you do it for free.
Yeah, you can go to those sites and then take that with you, so that they're getting a clear picture of, hey, I pulled this report myself on this day. I solemnly swear I haven't done anything since then, and that won't impact your score. Now, if they were to pull it, yes, the number of inquiries does impact your credit score. But what really drives your credit score the most is the amount of credit you have available versus the amount of that credit you're using. So it's your utilization as a percentage that drives a big component of the score. And then, of course, any late payments. So if you're a day late on that credit card bill, there's some grace period for a lot of things, but those are the things, like cell phone bills. If your cell phone bill is not set up automatically, that's one that we see. It's like, we kind of have this joke. It's like, oh, their score's down a couple points. Oh yeah, it's the cell phone. So having the convenience of those automatic payments really can help your score, and it can prevent those oops moments. And two, when institutions do look at putting a rate in front of a client, that score, every point does matter on that score. They have what's typically known as risk-based lending. If your credit score is lower, you're deemed a higher risk to the institution. The risk being that you default, that you don't pay. So that all goes into this, into the application, and then that gets considered when they do pricing. So it also raises another good point, is that when you're searching on a website, there's posted rates saying, okay, here's TD's best rate, here's Scotiabank's best rate. If you're actually getting those rates when everything's said and done, you would be the rare exception. Oftentimes there's there's differences. There's maybe the institutions would have assumed for an average risk, here's what we could do or what we're willing to do. Depending on what side of the coin you land on, are you a little higher than average or are you lower than average? That will reflect your ultimate rate. So the better you can do at keeping track of those bill payment due dates, not missing a car payment, making sure that any credit cards, we've seen this where a credit card was issued to someone and then they thought that they had closed it.
Oh yeah, that does happen.
Or lost the card, or they cut it up and they said that's enough to, I don't have it anymore. Well,
there's $3 left on it, and now they've been charging
and that's just it. So in this example that I remember from a few years ago, we pulled the credit score of an individual. There was a credit card that was considered, they had to write it off. So the banks or the credit card company took a loss because what had happened was the no fee credit card in the fine print, they allowed themselves to change the fees. Maybe they did mail a letter out, maybe they didn't. We don't know.
Yeah.
But that message didn't get properly relayed to the client, and they had almost a foreclosure or a written off debt on there. Because what happened, the credit card then changed from a no fee automatically to a fee. They applied the fee on the card, and the fee never got paid. So they got this blemish on their credit score, and
they didn't even know about it until they came in and saw you.
Exactly, and I'm questioning it. I'm questioning it because their score's low, and we're looking at that time. It was $1 million farm purchase.
Oh my God!
And I'm worried about a $75. I remember a $75 annual fee that was on a credit card. They didn't know they had. So there are services out there that will monitor your credit score for a fee. If you're doing a lot of borrowing as an active investor, maybe a paid service makes sense as a business expense. But truthfully, the Credit Karma of the world, those alternatives, make a habit. Set a reminder in your phone. Put a note on the fridge saying, in 6 months I want to check my score, just to make sure that nothing's on there that shouldn't be.
Yeah, and you can set up for Credit Karma too, and they'll notify you, hey, your score has changed. Your score has changed.
And that's
right?
a great service.
And so, touching on that is your credit getting you set up and positioned properly. I know we've talked a lot about that, but that is something that your mortgage broker can do for you. I get a lot of clients that say to me, well, what will my interest rate be? What will my mortgage be on this house? And I mean, I can do a rough figure, like you said. You can go online, you can see where it's at. I have a mortgage calculator, but at the end of the day, your realtor cannot tell you, hey, this is how much it's going to be, because we don't know. We don't even have access to the information that you have access to. So there's times when I've sent, especially the new home buyers. Actually, I recently had one. Really, really nice guys, and they went to the bank. They sat down with the bank, and the bank mainly said to them, you're so close to being there, but it's going to take about 6 months, and here's what you need to do. You need to do this, and this, right? So in 6 months from now, they're going to be sitting back down with their mortgage broker. They're doing the things that they were told by their mortgage broker to do, because the mortgage broker has that information with your credit and everything like that, right? So that you can gear people towards the right way so that they can get a mortgage.
That's right. Yeah, a lot of what we can do is coaching. Yeah. So that's a good term to use. It's popular in the credit union system. There's great people at all the credit unions that are out there, whether you use them or you use someone like us.
And it's free. It's free to do that. People don't take advantage of this enough. You know what? We go online and we look up Google reviews, and we ask our friends, and we do all this stuff, and we get all these big ideas. And I like what you said earlier. What was the word that you used? You said we like things immediate now.
Yes, impulsive.
Right? So people get excited. I'm going to buy a house.
Yeah.
Right? And they immediately jump in with having no idea of where they even stand with that. And it's a free service that you can just call up and say, hey, I'd like to come in and just see where I'm at.
Absolutely.
And they're able to do that for you. Now, one of the other things that I did want to talk about, because this is another thing that I see as a realtor, is I get people who come to me and they go, I'm approved for 700,000, right? And I go, great. Do you have a letter of commitment from the institution that you're working with?
Yeah.
And there's a vast difference. And I've even sent clients, I've met them, and it's like, now we're pre-qualifying, you need to talk to somebody. And they go in and they say to their mortgage lender, hey, I want to buy a house. And the mortgage lender says to them, yeah, you'll be approved for this much. They come to me, they say that, and I go, did you get a commitment letter?
That's right.
So do not, whoever you're sitting down with, especially if you're seriously looking to buy, you're going to talk about this, Jeremy, but there is a big difference between actually having a commitment from an institution and just having a mortgage broker go, oh, based on your income, yeah, you'll be good for this.
Should watch out for the keyword should. Should be okay. That's a big red flag disclaimer. Bells should go off, is because, to your point, they haven't seen the exact property. They haven't seen an appraisal. They haven't seen again your credit score with that magic credit card that just went unnoticed. So keep that in mind. Should is not an approval, and different institutions have a different approach for those letters. Some of them are just made at the desk of the frontline staff. There is no second look at what they'll need to actually execute on that quote unquote promise to deliver. It is always wise, whether you have the cash in your pocket under your mattress to buy a house or a property in full. Always put a financing condition in your offer. Yes, at times it can make your offer not look as strong,
but you gotta protect yourself.
You have to protect yourself.
Yes.
And that is, you can always quote unquote blame the bank if you need out, if you want out, and there's more value to that clause than what is on the surface of, oh, I'm not qualified. Blame the banks. You can get out of the deal and
not get sued.
Try again next time.
Yeah.
So when you are looking for that commitment letter or that pre-approval, make sure they list clearly, or that they've explained it to you. Okay, that's based on what scenario? Oh, did they see your T4? Did they see the MLS listing of the property? Did they take it beyond their desk? Did they send it to a credit committee or a credit approval authority? Frontline staff at all the institutions do not have lending limits. There's a conflict of interest there. So if they say it's okay, ask the question, well, who else said it's okay?
Yeah.
Did you take this beyond the local brand? Did you take this beyond the town or the community that you're in? Did you take this to the credit committee? So that's one thing, that's a great piece of advice to run with when you're putting in a serious offer, or you're looking to find out what your purchasing power is. And consequently, with that information, you can have a much better service from your agent, where, the worst thing is, like we said, we don't get paid unless the deal funds or you actually move into the property.
Yeah.
So you can imagine that, if you're not organized, you get into a situation where the bank doesn't approve you, there's a lot of time and energy that goes in on our end. That is the anticipation that it's going to get done. You do that enough, you may find yourself in a position where people don't want to work with you. That's the dramatic extreme example. But there is a risk that you do it enough times, you may not be a suitable client for services that are out there.
Yeah. And the other thing that I hear a lot of too, and this was really, really important back when COVID was happening, but it's still very important today too, is that people will come and they'd say, I'm approved for 700,000, right? I'm approved for 700,000. I can buy a $700,000 home. Well, that's great that you're approved for 700,000, but each individual home also has an approval. So you being approved by the bank and having that letter and everything like that, I mean, that's awesome. You're ready to go. But the other part is that the house needs to be approved by the bank.
Yep.
Right? And if that house, so let's say you're like, oh, it's 700,000, I have 700,000. And we would see this back in COVID where there'd be multiple offers and you would be putting in, people would be way overbidding, right? And then it would go to the bank and the bank would say, yeah, you're approved for 700,000, but this house is actually only worth 650. And I never had this happen because my process and my procedures are that I hand in the MLS sheet. They, at least at that time, were looking at it with the, like your, at, what is it called? They would do like a quick desk appraisal and stuff because things were moving so fast. So they were doing more of those. They're not really doing those at all now. They're sending an appraisal out, but the mortgage company also needs to approve the house, not just you, because guess what? If you're approved for 700,000 and that house is only worth 650, you're on the ropes for $50,000, and you have to pay that $50,000, especially if you've removed all of your conditions.
That's right.
So if you could speak to that, like what's the difference between the two?
Yeah. The difference there is every lender has their policies. That's the hard stop. So whether you're CMHC insured, another topic that maybe another video that could support.
We can do that another time. That's a good topic.
Support the conversation.
Yeah.
But depending on the product you're applying for, the traditional owner-occupied mortgage, you're limited to 75% typically if you're not doing CMHC, maybe 80. Most institutions can, yes, they can go up to 80. And then if you're doing the insured side of things, you can do a little higher. Yes, you have to be able to afford that, and we have to be able to prove that. But the other component, as Ruth Ann described, was the appraised value. So the short desk appraisal, the banker term is called purview. So that just takes sales data from the neighborhood and says, we think it's here. That's okay if you want to
have a ballpark.
Have an idea. There's a variance to it depending on, they're not going to know that the basement's finished with an extras ensuite or something, or a master bedroom in the basement and a big couple bedrooms upstairs. They don't know the fine details of what's inside the shell. So that's important to know. The full appraisal will pick that up. Of course, they'll take pictures. They'll run the analysis based on similar properties. That's why they need them. We all see, similar to what we see as what drives our tax bill, is the municipal property, the MPAC assessment. So you can see that where the MPAC assessment is showing that, the property's worth $200,000. Well, I just got an appraisal for $500,000. So anyway, as you can see, and that happens where MPAC just hasn't done an update to that region yet.
That can happen. That does happen.
Similarly, that's where the desk appraisal, the purview, can look like an MPAC statement where it's like, there's no way. Again, there are other features to the property that the quick appraisals, without the MLS listing to show all the features, that the bank could miss. So like you said, yes, I'm approved for $700,000, but am I actually buying a $700,000 property? We have to answer that question and prove that they line up.
And that comes back to teamwork, like we were talking about at the very beginning of this podcast, is that your mortgage broker, so I would send that MLS sheet to the mortgage broker, and my process is to do it before I write an offer, right? So I know if we're going to be writing an offer, whoever your mortgage broker is, bank, lender, or credit union, I'm sending that information and saying they would like to write an offer on this house. The comparables for the property are showing that it should be in this range. They would like to start at this amount. What are you seeing on your end?
What does that mean for the
What does that mean for the client? And then the mortgage broker is able to talk to the clients and be like, okay, so this is probably where it should come in, but we're also going to still need X, Y, and Z, right? And teamwork is so important, again, even with your lawyer, with your accountant. All of those things are coming together to be able to get you the best rate, the best experience, and the best deal possible for your home and life.
Absolutely.
Yeah. Well, thank you so much, Jim. I appreciate it. And you're right, we should do a CMHC.
Yeah, that'd be a cool one. Because as a tangent, I'm helping a friend buy a farm. And similarly to CMHC, the land transfer tax it's like a step function. So it's so much on this amount, and then so much on that amount, so much on that amount, you get over $500,000. And then I did another one. The property is in Mississauga. And I'm like, you can get 95% financing. You just pay the CMHC. Well, that was like $30,000. I was like, I better not throw that out there so willy-nilly, because that's a hefty chunk.
Yeah, $30,000 is a big amount.
So yeah, it's a topic on its own. Yeah, I'd love to do round two. That'd be great.
Yeah,
Yeah.
that sounds good. Well, thank you so much.
You're welcome.
All right. Have a good day.